All right, welcome back to our number three. We got Fernando Angelucci with us, and Mr. Nowicki will be joining us soon as well. So Fernando is going to cover, really talk about the asset class of self storage from the investment perspective, and a little bit of really who Fernando is, how they do business under SSSE. So welcome, Fernando, to our AI Impact Forum, because that's the quite impactful asset class. So let's talk about it, and welcome to the show.
Yeah, thanks for having me. So, can you see my screen all right? Intro to self-storage here.
Right.
Perfect.
Yes.
Okay. All right. So, just a little bit about myself. My name is Fernando Angelucci. I have done about $250 million of self-storage in the last 8 years. That's 55 facilities across 26 states. We have about 2 million net rentable square feet and a little over 900 passive investors. We have gone full circle in 39 deals with investors, producing a 57% average internal rate of return to those investors over that period. So one of the things that I always like to talk about is, why self-storage? I came up through the residential and multifamily side of the world, and I always kind of had the same issues. It didn't feel like a business because I was working too much in the business, spending 80 hours a week, doing 70 transactions a year to basically have nothing to show for it. When I switched into commercial real estate, I realized that self-storage was a good alternative. I didn't have the same problems via, the tenants, the toilets, the trash that keeps all landlords up at night. So here's what we're going to talk about. One of the highest returns across any asset class. It has a very good recession resilience, great leverage, easier management. There's a fragmented market, which produces some great opportunities, very low break-even occupancies, and then easy evictions. And we're using quotes around that because we actually don't have evictions. And then why it has such a high sticky factor, and then some ancillary profit centers that you can add on in addition to the monthly amounts that you charge for those storage units. So, highest asset class versus any other asset classes, highest return. If you look at there's a study done by the National Association of Real Estate Investment Trusts as well as Y Charts, and they showed that over the study period, just shy of 30 years, the S&P returned about 11%. That 100,000 invested in 1994 would have been 1.6 million. Residential did a little bit better at 14.4, 3.7 million, 3.8 million, but self-storage produced on average 18.8% return annual. So that 100,000 invested compounded comes out to about $10.5 million. So you can see, even though jumping from 14.4 to 18.8%, that may not seem like a big difference, but when you realize the power of compounding interest, you realize how much of an additional gain that you get. So, recession resilience, a lot of us listening here probably went through the great financial crisis. There was some pretty heavy losses during that time. S&P 500 dropped about 22%, multifamily about 7%. Now, this is, you know, numbers based on REITs. I know a lot of operators that were in the single family and multifamily business that lost everything. They were foreclosed. They went through bankruptcy. During that time, self-storage dropped only about 4%. And the reason for that is that self-storage, is a business that caters to people in transition. So when you have to downsize, when you have to move because you have a new job, those things affect the self-storage world. So, why is that? And when I look at the trends in the self-storage business, not only do we service those in the kind of the transition business, but also now we are kind of seeing this two-tiered economy where the days of buying a five-bedroom ranch when you were 20 years old for 20 grand are long gone. So what you're starting to see is this affordability problem in the United States getting worse and worse. and people are opting to use self-storage as a permanent closet or an extension of their home, as opposed to paying an extra 50 to $100,000 for an extra bedroom. Or if you're renting, extra $500 to $700 a month for an extra bedroom, you can go and rent a 10 by 10 self-storage unit for anywhere between $80 to $180 a month. So it just makes a lot more economic sense. Fast forward to another kind of major recession during the pandemic. Self-storage performed very well. According to TREP, which is a commercial mortgage-backed securities research firm, of the 1,700 CMBS loans that were made to self-storage facilities in the first 3 quarters of the pandemic, only three were delinquent. So that is a 0.17% delinquency rate. During that same time, multifamily was defaulting at a rate of 1,800% higher, or 18 times the default rate of self-storage. And it makes sense, right? People couldn't work from the office, kids couldn't go to school at school. So then all of a sudden you lose a bedroom or you lose two bedrooms, and you turn those into your office or your school, learning zone, and you have to put that furniture somewhere. And a lot of people put those into self-storage. During the first 2 years of the pandemic, we were seeing 80% year over year rent growth across our portfolio, which is astronomical numbers. So, like I said, best year on record, 2021. We had over 80%. Now, when it comes to safest loans equals best leverage, self-storage is one of those asset classes where the default rate has been very low in times of economic turmoil. There was a study done between 2011 and 2018, which we'll talk about here shortly. The other thing that's very important to banks, which then also guides whether they want to give you a loan, is what is the average loss per default? So it's not just did you default your loan, but when they had to get rid of that loan or take it off their books, how much did the bank actually lose? And because of these two things, banks are fighting over us to give us really great leverage when other asset classes are struggling to get great financing. So let's look at some of these studies. 2011 and 2018, this was done by Intech Solutions, and then there was also a Wells Fargo Securities study on this. As you can see, the self-storage default rates compared to the average, and then compared to, let's say, hotel, multifamily, retail, office, and industrial, it's a stark difference. I mean, in some cases, 4 to 8 times lower when it comes to the default rate. And then, the thing that the bank really cares about is, okay, fine, you stop paying your mortgage, but how much did we lose when we had to finally foreclose on you? And so what you can see is self-storage, again, is leading the pack, 3 to 4 times lower than the average of all real estate. And then when you compare it to some of the other property types like retail or office, you can see that it is much, much lower. So on average, when a loan was disposed, there's only about a 1.5% loss, and disposed and outstanding only a 0.8% loss. So to the bank, that's almost like you're breaking even. Less people equals less management. I always like to ask, who here thinks that they actually have passive income? And what we find out is what people think passive income isn't actually passive. It's very active. My very first self-storage facility that I bought in Yorkville, Illinois, which is kind of far suburb of Chicago, we spent about 4 hours a month on that facility to produce about 8,000 a month in NOI. So my time on that facility was about $2,000 an hour. So that is what I would call passive. Many smaller facilities are unmanned and can be automated, especially now where you have these large technology platforms coming into our industry and allowing for ease of operations from literally across the world, just using a cell phone. So there's things like automated keypad entry and exit, even automated locking units where if someone does not pay on time, their unit is automatically overlocked. There's a number they can call, they can process their payment, and then that unit is automatically unlocked for them, as well as allowing their keypad to be liberated, which then, that all of that is done without the actions of any human involved. So you reduce labor costs pretty substantially. Fragmented market. This is one of the main reasons I came into this industry. There was a 2017 study that tried to figure out how many self-storage facilities there were in the United States. They came out to about 52,000. We know now that that number has increased just with the increase in development between 2017 and 2026. So right now we're estimating between 65,000 and 70,000 self-storage facilities. But the thing that's important to look at is the industry ownership. So 20% of the facilities in the United States are owned by the six largest publicly traded REITs. These are names that you're familiar with: Public Storage, Extra Space, CubeSmart, U-Haul, those types of guys. 10% are owned by the next 100 largest operators. I'm part of this cohort here, right? So that means that around 70% of the facilities in the United States are owned by mom and pop operators. These are people that own two or fewer self-storage facilities. Many times they are the ones that are sitting behind the desk at the facility, operating it themselves. They become friends with their tenants. They don't charge late fees. They allow large unpaid balances to accrue. So these are all opportunities to get in and buy a self-storage facility that has a lot of meat on the bone that you can systemize and institutionalize using these technology platforms, including artificial intelligence. And we can cover some of that later if you guys would like. In addition, a lot of these mom and pop owners are of retirement age, and in some cases, they're already on their second or third retirement, and they just want to take their money and run and go travel around the world. And usually, in order to do that, they are willing to do some type of creative financing or creative deal structuring in which that we can get into these facilities with low to no down payment, much lower than market interest rates, in some cases 3 to 5% interest only for balloon payments of up to 10 to 12 years. So there's a lot of opportunity in this trend of aggregating these smaller facilities into larger portfolios and then selling them up the feeding chain. And then the three T's. This is what kept me up at night when I ran a habitation-based portfolio. We had just shy of 70 apartments. Um, this is where all my problems came from, even while using a third-party management company. So what I love about self-storage is that it has a very low break-even occupancy. You're looking at, for unleveraged assets, low to mid 30% will cover all of your operating expenses. If you have leverage, then you're looking at mid to high 60% occupancy, maybe low 70%, depending on what type of debt you're able to achieve on those assets. And then very low overhead. We have minimal utilities because, unlike apartments, I don't need to send plumbing and HVAC and electrical to every one of the units. Usually, the only thing that you're going to have is for the office, if you have one. That's the only place usually where there's a bathroom and there's, heating and cooling, and at least at human comfort levels, right? You can run a climate control facility, but you're not keeping it 7 degrees year round. You're probably keeping it 80, 85 in the summer and 60, 65 in the winter. So you save quite a bit on your utilities. There's no carpet cleaning, there's no painting, there's no leaky faucets. There's no winter HVAC failures. There's no hot water heater failures. I'm calling in today from Chicago. So, if your HVAC or your hot water tank goes out in the middle of February when it's negative 20 degrees, that is now a life or death situation. And you need to address it regardless of what the cost is. And if your HVAC or hot water has gone out, most likely other people's HVAC and hot water have gone out, which means now you're competing for these contractors' time, which means they're going to surge price you. You want this fixed today? Fine, I'm going to charge you 6 times the rate that I usually charge when there isn't some type of large, freeze event or snowstorm, etc. So we aren't subject to these types of surge contractor pricing. Here's just a case study of that first self-storage facility that I was talking about. This is the reason I used the first self-storage facility I ever done is because I didn't know what I know now. So this is, if you were to go into this asset class, this is kind of what you can expect. When I bought this, the break even at purchase was a 35% occupancy without debt. It was 81% once I put debt on that facility. But then once I did the value add and we were ready to sell this self storage facility, 28% occupancy covered the expenses. Or another way to use this number is to call it an expense ratio. So 28% of my revenue went to paying all of the operating expenses. And then once you include a debt payment, I only needed about 64% occupancy in order for that facility to break even, not only from an operating standpoint, but from a debt payment standpoint. This is the biggest thing that usually converts a lot of people away from habitation-based real estate. And I say habitation-based real estate because it's not just rentals or apartments. It could be Airbnb, it could be mobile homes, anywhere where you have someone living inside of your assets, which inherently causes a lot of risk. We are guided by lien law or property law versus landlord tenant law, especially in places like Chicago, New York, LA, San Francisco. The laws are getting stricter and stricter and stricter on the landlords and allowing the tenants to really kind of push the envelope. We've had problems with what I call professional tenants, where they know the rules to a T, and they do things on purpose in order to extend the amount of time that they can live in your asset without paying rent until eventually you have some type of eviction. In some cases, that could be 8, 9, 10 months after they've stopped paying before you can get them out, not even including the lost rent. You have, if they damage your property, then you're going to have a bunch of repairs that you need to be able to get done before you can put that property back on the market. Um, you know, when a customer stops paying, their access to their unit is automatically denied. And there's ways that you can do this. If you don't have a high-tech facility, use these red manager locks to overlock their units. If you do have a high-tech facility like the ones we build nowadays, they can't even get onto the grounds of the property because their keypad won't even open the fence for them. Or if it's a completely enclosed building, the keypad won't allow them into the building or into the elevator to get up to their floor, what have you. The auction, the belongings get auctioned off to pay back that back to rent and any additional fees, and these fees are set by statutory laws in the state compiled statutes. So lien fees, late fees, auction fees, all these types of things. And the turn for these is usually just sweeping the unit. And it's not us or our managers that sweep the unit. Typically, what we do is the person that bids on the auction to buy these materials inside of these delinquent units, they have to put up a deposit of anywhere between $200 to $500 that they only get back once they show proof of a broom swept unit. So usually they're the ones that are turning the unit for you, which means that within 30 to 45 days of the original date of delinquency, you already have a new customer in that unit. So much faster turnaround time than what is usual in, let's say, habitation real estate, can be 3 to 6 months on average.
Fernando, so
Very high.
did
Yeah, go
anything
ahead.
change in Illinois from the regulatory perspective? It still requires a newspaper, right? To
Correct. Yeah. And it depends on which state you're in on how the announcements go out. Some states allow for online publication that a unit is going up for auction. Some states require that you put it into a regular newspaper. Some require that you put it into a legal newspaper. So it really just depends on the state that you're operating in.
Thanks.
So, high sticky factor. Self-storage is one of those things where, because the nominal cost is much lower than, say, rent, when are to increase the amount for that unit on a monthly basis, it usually doesn't make someone want to move. So let's say, for example, you raise the rent by 20% on a $150 unit. It's usually not worth the 500 plus dollars in cost to move to a new facility. You can think about renting a U-Haul truck and bribing your friends with pizza and beer to help you move some 3 old couches that you haven't sat on in 20 years, right? It's usually not worth it. So people just eat that cost. But that is a 13% increase to the bottom line with no corresponding increase in expenses. Now, let's look at the same number for a rental. Let's say you are renting a $1,500 a month apartment, which is in Chicago is extremely cheap. It's very hard to find rentals that are that low. Um, that 13% increase would be a $195 per month increase in rent. Do you think a tenant will stay if you increase the rent by $200 in 1 year? Probably not. They're going to move wherever they need to keep the rent the same or lower than what they were paying before. And in some cases, they're willing to move across cities or even to different parts of the state. The nice thing about self-storage is that you're not only just getting rent for the store, you're not getting profit just from the storage units. You can do car storage, RV storage, boat storage. You can sell locks, renter's insurance, moving supplies, packaging materials. You can have a FedEx satellite site, a printing services, a scanning services, cell towers, billboards, wine storage, truck rentals, private mailboxes, propane filling, ATMs, vending machines. All of these things produce profit to you, or in some cases without even any additional expense, because some other company will operate the main expense driving function, and then you get a cut. So, for example, renter's insurance, when we sell renter's insurance, it's required for our tenants to get renter's insurance. They can prove to us that they have renter's insurance within 30 days of renting one of our units. But if they don't, we automatically apply our own renter's insurance onto their account. And that renter's insurance, we usually get to keep anywhere between 60 to 90% of what is billed to the customer on a monthly basis, right? And that is no additional effort on our part. So, this is why I like self-storage. High return, recession tolerance, great leverage, easier management, fragmented markets, low break evens, easy evictions, high sticky factors, and ancillary profit centers. But a lot of people say, well, hey, Fernando, that sounds all fine and good. Like, what are the downsides? Well, I'm glad you asked, because I'm going to show you how to mitigate those downsides. The first is that because this asset class has become attractive, back in the day, you'd be able to pick up self-storage facilities for 12, 15, 18% cap rates because it was not considered a traditional real estate asset. But now, because it's becoming more attractive, cap rates are compressing, and it is creating a competitive acquisition environment. In addition to that, you are now starting to see a lot of general brokers moving into specialized self-storage brokerage only, where they only work in the self-storage field, which ends up, stripping a lot of upside. So one of the solutions to that is to go off market, either go direct to seller or use some type of wholesaler to find your self-storage facilities as opposed to going retail, and then to buy facilities that there is a value add component where you can force appreciation as opposed to just buying stabilized assets and hoping that inflation raises your rents over time. The second big issue is oversaturation. There is a land grab by the large entities to just stake flags into a market, knowing that it may not be profitable right now, but it may be profitable in, let's say, 5 or 10 or 15, 20 years. So, because self-storage has a much cheaper construction cost on a square foot basis versus, let's say, habitation-based real estate, I could put up a self-storage facility for anywhere between $60 to $120 a foot, depending on the grade that I'm building. Whereas if you're going to build an apartment building, on the low end, you're at $250 a foot. And on the high end, if you go very luxury, you can get up to that $450 a foot, while both produce roughly the same type of rent per square foot. So that is very attractive to those that had a lot of money, were investing in the let's say the apartment market, and now are seeing that those returns are not there. They're willing to pivot into a cheaper build industry like self-storage. So this causes the supply index to drop year over year. Supply index is just a measure of how saturated a market is. It's typically measured by the total net rentable square footage in a market divided by the population in that market or that trade area, whatever it may be. So the solution to this is, the importance of underwriting and getting feasibility studies. You don't want to build into a market just because you bought some cheap land. If all the competitors are 50% occupancy and run a bunch of specials, that means that market is probably oversaturated, and it doesn't matter if you were able to get land for a dollar, because the self-storage facility is not going to be able to operate at a level that you'd want it to. And then the last thing is, REIT competition. These guys are huge. They're billion-dollar companies. They have unlimited capital needing deployment, and because of their tax structure, the real estate investment trust, they need to either use or distribute the majority of the capital that they make in a given year to retain that favorable tax structure. The other thing about REITs is they typically have longer investment timelines. They can invest in a 30-year play, whereas typically my investors want their money in and out of a deal within 3.5 to appreciation in a short period of time. The solution to that is usually going to secondary and tertiary markets versus primary markets. So, for any of those people that are familiar with the Chicagoland area, as opposed to trying to buy land and build property in the Loop, you go out to Naperville or you go out to Aurora or Joliet. It's still technically in the Chicago market, but it's not a part of Chicago. It's 45 minutes, an hour outside the city. I like to call these, bedroom communities. These are the people, this is where people live and then they commute into the major cities for work. These are really great markets to go after when you're trying to compete against these REITs. So that's kind of my presentation. Here's my contact information. Feel free to reach out if you have any questions. This is our website. So with that, I will turn it back over to Andy. If I could figure out how to stop sharing here.
Yeah.
There we go.
Thank you, Fernando, for sharing. And I see Thomas is there.
Yeah.
So, Thomas, I'm gonna share your webpage, and you can talk in a behind the scenes. I think it's gonna be easier. Let us know where you're at in a world again.
Can you hear me?
Yes, we can hear you now.
Just can get some echo here because I'm not in the office, as you can guess. Uh, I like to play tennis, so this time I just visiting Cincinnati Open, second round. Right now actually you have number 5 in the world. Maybe you know this gentleman. His name is Novak Djokovic, playing third set on the center court. So I
So
just stepped.
thank you for stepping out and joining us for the conference for a few minutes.
That's right. I hope he moved to the next round so I can see him again in a couple of days. But anyway, well, thank you for having me. And today's not going to be too long. It's going to be shorter thing. But just want to bring you to the speed what's going on actually in Florida on our market right now. Actually, we're in the process of almost concluding our process of receiving new permits for 3 new projects actually. So about to start in a couple of weeks. So far the projects that's in the motion, they moving pretty good. Everything is scheduled. The weather sometimes on and off, especially in Florida, and that time of the year when we get a lot of rain, almost basically every day. However, we're managing that and moving forward, right? So I guess that's the part of what we do. What else? Guys, real estate is a great business to be in. See, I'm a perfect example. When I can be on the tournament and still work, still my business is growing. We obviously it's a weekend, so we still work Saturdays some cases. However, everything is continuous every single day. So we can stay on schedule. We can have more projects to offer to our customers, and and be able to actually market ourselves and then create more opportunities for investors, for sellers, for buyers.
So Thomas, tell us where you exactly at. I'm looking at so Sarasota is main place where you are actually building the properties and looking to sell them, obviously. So talk about this market. Why Sarasota? What is so great about that location?
Well, I can bring you to the speed. I mean, I ended up in Sarasota kind of literally by accident. I would say 40 years ago now, friend of mine, 40 and a half friend of mine invited me over to stay on Siesta Kay in a rental property with them for days. And, I just started to look around. It's very nice location-wise place, but at the same time was still quiet. Looks like undeveloped, kind of like diamond in a rough, I could say. And that didn't give me was sitting on my back. Was still doing business in Chicago, and few years back, about 2018, I decided to pull the trigger, start looking more closely, paying attention what's going on in the market. And in fact, we got one property under the contract, but it requires substantial amount of money to be invested. One of my investors got cold feet. We were not able to secure the financing on time in a short period of time, and we have to let go of the project. But I didn't let it go. I mean, I still decided, to put some other funds and some other, money behind it. And finally, we secured our first project in 2021. Short after that, I got fully licensed in Florida. I was going to use some local developers to work with them together. However, people mentality in Florida is totally different than us in Midwest. They have time for everything. They business oriented, but they not they don't take any concerns as far as the project will be finished 8 months, 10 months, or 15 months. And as you know, Andy, in our business, timing is everything, especially in real estate, when you sell those projects. Because when you build them and hold them, I mean, you can miss a little bit, you still should be okay. But if you decided to sell them, you miss the seller market versus buyer market. That's a big thing. And like we changed, the interest rate went up a lot, right? So a lot of people slow down. The prices kind of got flat, but it doesn't mean we cannot make money. We still can create opportunities and build those projects and sell them. However, it just requires more dedication, more detail-oriented people to find every single detail, not to overlook anything, to be able to put them together. But I don't want to get sidetracked here. So that's why when we start, I decided to get my license, and we put first couple of projects, then another round of projects. Now we on our, I would say, third round of projects, doing few at the same time. It's a good feeling to have. Like last fall, we got to the point we had more buyers than projects to sell. I mean, it's pretty nice. So that's what I'm trying to do. I'm trying to, increase my, my team and put some more people to work with us to be able to produce more real estate at the same time, because we actually more higher end market. Our projects usually start somewhere around resale value somewhere around 1.7 1.8 million and up. Right now the projects we are in a process, they are somewhere between 2.6 to 4 million, so they were more expensive. However, they have premium locations, which that's what drives those prices up. And there's plenty of people on the market who will pay that premium price to being on the water, like we're doing one property on the water, when you can have your 30-foot boat basically by your house, and whenever you feel like you want to go on a ride and take your family, friends, and have some great time on a Sarasota Bay, which is a really great place to spend your weekends on. A lot of sandbars, turquoise, blue water. I mean, what not to like it? The only challenge we have to have all time to all those things, right? So we have to work harder, we have to work smarter, but when the time comes, we can actually enjoy ourselves. And like I'm enjoying myself today. I mean, all this weekend in Cincinnati, being able to see, best players in the world from the very close distance, performing on a court with some excellent results. It's pretty hot actually here. It's very humid. I was actually surprised, almost as humid as Florida. So I'm not jealous for those players. I mean, they just have to go through a lot of hard work to be able to win those points and so on. So that's where we at. We putting more projects together. We adding more investors. You guys can become part of it, and you can always go to our website and you'll be able to connect you, how you can find us, how you can meet with us. We are available for meetings here in Florida as well as in Chicago, Illinois. I'm actually transferring myself pretty often. I'm usually once every 2 weeks in Chicago, if not more often sometimes, some cases. So that's where we at right now. The hurricane, what they say, season it's coming closely to the end. We did not have any hurricanes yet. I don't want to jump any hoops here. We still, I would say, another month, maybe to even 6 weeks of season. But water is not that hot actually in the bay. At least I was able to test it earlier on this week. So comparing to last year or 2 years ago when that hurricane happened, it's much cooler, which means technically lower chances or lower probability for hurricane to happen. But you never know, guys. We have to be always ready and and be respectful to nature. Let's put it this way.
Yeah. You have to be ready, prepared, and strategically set
That's right.
for the changes. So
That's right.
if Fernando is still here, thank you, Thomas. Thank you for missing a game. Are you watching somewhere else on the TV? You know the game.
Well, I'm watching on the other end of. Maybe I can show you. They putting a live feed right here by the stadium.
Okay.
Sure, you can see it, but
Yeah, it's not coming super clear. You know what?
I know. So yeah,
Let's get to the quick discussion because this is AI Impact Forum. And Fernando, are you still there? There you go. So you mentioned about the tools, about the technology. I really want to hone into this right now, how the technology is helping the operators right now, what the operators that do not leverage the technology probably need to learn, and basically what we are doing, we're closing that gap for the operators. That's the purpose of the whole Pure Experts ecosystem, to provide workshops and certification programs for the business owners, investors, and anyone that wants to get, well, out of the corporate, maybe, because you can retire probably, you can retire so safely having maybe $300,000-$400,000 and really you don't need more money, because that's the efficiencies that we are getting. So I really wanted to ask you guys, where do you guys see AI? Do you see it as a bubble or something else? So Fernando, I know that you're using a lot of technology in a setups, and that's because you're getting the efficiency there. And I would not even think about it any other way.
Yeah, so historically, self-storage has been a laggard when it comes to implementing technology. I mean, even to this date, when I'm buying some of these mom and pop facilities for, in between the $1 to $3 million range, or $1 to $5 million range, there's times where when we ask for financials and for occupancy statistics, someone mails us a yellow legal pad as opposed to, using QuickBooks and property management softwares. But as far as the kind of more advanced technology that we're using nowadays, AI is a big piece of that. So, just like the dot-com boom and bust, there were companies that came out on the other side that are now massive billion-dollar companies, Google, Yahoo, Amazon, things like that. So I think it depends on where in the AI ecosystem you're looking. I think applied AI is a great space to be in. So for example, applied to self-storage, we have a software that it kind of does three things for us. So the first is that it goes through all of our rent rolls and it assigns a numerical value between 1 and 10 on how likely someone is able to absorb a rent increase. And it does this based on a lot of factors. So, for example, if you have someone that is, paying late every month with cash or with, money orders, and they're posting on publicly available social media accounts on how, they're falling behind on their bills or they're in the hospital, that person's probably going to be scored lower in the fact that they most likely cannot absorb a higher rent per month. Whereas, let's say you have someone that pays with an Amex Platinum every month on auto payment, and they're posting on their social media channels, that they're flying in first class and they're taking a vacation in Bali, or they're watching a championship tennis game somewhere right now. If this is available online, the AI will go and scrape that information, say, hey, this person's probably going to be scored a 10, a 9 or a 10, and most likely we can raise their rent pretty substantially, anywhere between 10 to 40, 50%, and they may not even notice it because they don't even check their monthly statements on what is being paid and when. So that is one of the three functions. There's another function where we are now starting to do what the airline industry does, if you're getting a plane from here to New York, it's a plane from here to New York, but that doesn't mean all the seats are the same, right? If you're buying those flights right before Thanksgiving, as opposed to buying them 8 months before Thanksgiving, you're going to pay much higher amounts. So there's this demand-based pricing based on internet search results and how many people are searching for self-storage near your location, and the AI can actually adjust the demand pricing based on that. And then in addition, just like on the airlines, you can pay for first class, you could pay for premium economy, or you could pay for, basic economy. And those, even though it's the same plane going to the same place on the same date, you have different pricing. And the same thing happens with self-storage now. We have kind of a good, better, best model. Let's say that we market a 10 by 10 unit for $100 a month. Well, that 10 by 10 unit for $100 is on the third floor as far away from the elevator as possible. Now, if you want something on the third or second floor right next to the elevator, that may be $110 or $120 a month. And if you want something on the ground floor right next to the entrance gate or the entrance door, that may be $140 or $150 a month. It's all 10 by 10 units, but people will pay for a better location, just like people will pay for a better location on an airplane. And what we find is that depending on the market, we have a click-through rate of anywhere between 30 to 50% of people going with the upsell unit, even though it's the same amount of storage space. And then finally, the last piece is dynamic pricing based on what your competitors are doing. If you notice that all of a sudden all of your competitors are charging 20, 30, $40 more than you are, that means that there's an opportunity for you to also raise your rates to be in line with the competition. A lot of these older mom and pop operators, they're not checking what the competitors are charging for the competing units, let alone checking it on a monthly, weekly, daily, hourly, or by minute basis like this technology does for us. So that's just one of the many AI implementations that we have used in our company and continue to use. And then even on the other side of the business, which is, let's say, the investor relations and capital raising side, we use softwares that now, for example, I have just shy of 1,000 investors. If I had to manually upload each investor's K1 statements by opening up the K1 to make sure it was them and then putting it into their account to make sure I'm not crossing paths and people aren't getting other people's financial tax documentation, that would take me 6, 7 hours. Whereas now I can use AI, that the AI will read all of the documentation. It will automatically assign which investor goes to which document and then upload those files to each of those investors. So now for just shy of 1,000 investors, it takes maybe 30 seconds to do document matching, upload, and to outlay all of those tax documentation. So see, and we use it in all facets of our life. Presentations, lender files, loan request proposals, equity request proposals, property management request proposals. All of this we are implementing artificial intelligence to further make our time efficient and then drop the amount of labor costs that we have to pay for on a monthly basis.
And the question that I have for Thomas, that's the same question, but I know you doing this different, but Thomas, I told you that the solutions that I wanted to provide to you will be based on the hardware, because that's what I see right now, and I think that's important to make sure that you always have the proper guardrails, proper policies set up on that computer. I don't think you really need much more robust system than what can be really set up from the perspective of intake and really depending on how we're gonna set up the automations that are gonna be helpful in your organization. We still need to get this done. So I know that your life is busy, and I hope that we'll be able to set it up within the next few months and be able to present this by maybe November or December of this year. The deployments are super quick, and that's what we really do. It's a 30 days deployments, or we can set it up even quicker. but that requires even more time through the conversation. So those are the setups that we're building for the operators, not necessarily for everybody, but the workshops and certification programs that we have, well, are simple, and we try to do it live as well. But you always have the portal, and you always and we really use the technology for ourselves to make sure that the students, members, and clients are really taken care of, and they always get the latest information, the solutions that are gonna be built. What I started doing probably about a year ago, it's different than getting a software. I am building the software of my own, right? It's a custom solutions that we provide with all the knowledge that can be still connected to all the databases. And that's the biggest advantage of creating those individual hubs for the business owners that communicate between the other hubs to create the opportunities. So that's really what I'm gonna be starting to explain on Monday with the different videos, because those solutions exist right now, and it's a mindset shift change, the same way as we were talking about workplace violence prevention yesterday. It's a mindset shift change to start leveraging it and using it in your business. I know that looking for and training your employees, I think that's the most important, because the deployments that I am doing, it's really specifically so I can train you as a business owner, as well as employees that are there, because you need to communicate with them at the same language. So it's usually just ensuring that everyone is on the same page. We do it in those 4-week deployments with the workshops. So Thomas, I'm not gonna be holding you because I know that the game is running. I will come back to Fernando for a few more questions. But Thomas, let me know if we can do follow up maybe within a week, so we can have more conversation, and hopefully in front of computer, so we can really get to the nitty gritty and presenting the actual stuff that we can help from the alliance perspective. Because as I mentioned, we are building the alliance. Alliance is something that is supportive structure, so you will always get the same information, and everyone that is joining the alliance will have the same opportunities, and the information sharing starts from that perspective. So, and
Definitely, Andy. We'll have more time next week when I'll be back to business. Let's put it this way. However, yeah, I mean, our structure of our business is unique in the sense of every project we build is different. We're not, let's say, Lennar developer who's building 60,000 the same basically houses. They different by a few square feet. They have 4 or 5 models, and they're doing paste and copy. Each the project I do it's different. It's custom, has special features that none of them has it. That's why I always laughing at it. That's why we have to charge so much. So.
Well, that's good that you have to charge, and I showed the project, so beautiful design and the quality of work, and I think that's what I can say about Thomas. Quality of work is there because he is actually always on the job site. He's actually checking
lately, yes and no. Actually, what I try to do, I try to delegate, like we discussed that, and try to implement more situations. What I try to do, I try to spend more time with people who are not actually physically on the projects. Yeah, work with designers. Lately we are in the process of adding another member, possibly to our team. We didn't sign any contracts yet per se, but ladies kind of on the trial basis when we do some drawings and ideas that she sees versus what we see. But each person who's in a team can bring more to the table. I don't know all the solutions or the ideas we can put. Sometimes it takes 1 or 2 people to create 4 and 5 people to create 8, and that's how it goes. But definitely, it will be pretty important for us to kind of streamline the process so we can create more projects, kind of unique projects, but at the same time, have enough product on the market so we can market to our buyers because you know it's a long process to build one custom home and takes only 2 hours to close it. And a lot of people don't realize that but to get to the 2 hour closing, it's a different story, So you want to make sure you're not going to overshoot yourself or overinvest or underinvest, one of those things. So we'll be talking more about it in our next meetings. But definitely great to hear you guys and enjoy the rest of the meeting. I gotta get going. We have a couple of games left in this third set, so let's see who's gonna
Okay.
take it. One more good thing for you, just to let you know, today is kind of Polish day on the tournament. We have already two Polish games, both Magdalena Frank and Maja Chwalińska. They won. They moved to the third round. I was on both of those games, and in just a few minutes after Mr. Djokovic leave the center court, if he win or lose, we will see in a few minutes. Mr. Hubert Hurkacz will take the center court here in Cincinnati, try to move to the third round as well. So we'll see what's going to happen.
All right. Thank you, sir. Have a great day.
Thank you. Thank you.
All right. Thanks, Fernando, for coming back. It was designed to be a calm presentation, but everything is live, right? So everything what we do live is it's hard to control, and we need to adjust. So let's talk about it. How that AI is helping you to stay calm and adjust. Because do you see that as something that is calming, or as something that can create a havoc in a universe, which I hope it's not. I'm looking forward to like changes and the efficiencies that are coming from this. And I think United States is quite well prepared with the actual paperwork that makes sense, right? So the big beautiful bill is actually quite focused on an AI, on an infrastructure. So from the legislative process, do you care to comment on that?
Yeah, so I think it's not just one of those things where you just open up GPT and start typing. There is an education process that you need to go through for prompt engineering, and it can be for business, it could be for, a therapist if you want. You're talking about is this something that makes me calm or not? What I like to use it as is almost as a kind of senior strategy advisor. So I have to feed it the inputs that make sense for it to be able to act like that. And then I need to be able to give prompts that make it think strategically in a way where it has an expertise in decision analysis, opportunity cost assessment, and high stakes planning. I don't want it to just be a yes man. So you have to clarify, I say, ask 3 to 5 clarifying questions to understand my context deeply. Identify, let's say, 2 to 3 of the highest leverage actions specific to the situation that I'm asking about, not just general best practices. And then, for each action, why does it matter more than, let's say, the other 20 things that you're suggesting? So I always want a ability to bounce ideas off of it based off of the data set that I feed it. And then I want it to, not only challenge any faulty assumptions I'm making, but then also to rank recommendations of next steps by impact and feasibility. And instead of telling me, what is actions A to Z, I want to know what is the next action that I need to do that's going to have the most, 80/20 result. And then once I'm done with that action, I'll come back and say, okay, I completed this. Now what is next? Just to keep me focused and centered, because, there is such thing as analysis paralysis. Let's say you want to build a new platform. What is the very, very first step that you need to focus on to build that platform? So, I find that it allows me to leverage not only the data that I have, and for it to compile it in a way that allows me to almost get consultant level responses, something that you would have to pay, Ernst and Young, thousands and thousands of dollars an hour, and it can do basically the same thing as long as you know how to build those prompts and feed it the correct data sets. So, I think there are a lot of bubble type investments out there around the AI craze, but then I think there's also a lot of progress that's being made and efficiencies that are being made if you know how to use it appropriately.
So that's why, starting with the workshops, it's easy, but everyone can do it by themselves right now. That's the problem, and opportunity. I look at this as an opportunity to guide somebody to make sure that you do it right. Because of the consultancy, it's easier to ensure that we set up the proper guardrails, proper policies. If you are entrepreneur, solopreneur, and you make your decisions yourself, it is really a powerful guide as well. If you set it up like Fernando mentioned correctly, with there's hallucination. There are issues, right? They are designed to be basically being your yes man, and give you all the data that you want to hear. So sometimes really changing the pattern and going from something completely different, and really jumping in between the models. That is quite important, because one model is going to give you those solutions, but the other one is not going to be the best for the long runs of crunching the numbers or doing the uninterrupted research that now is quite possible with those tools. So that is the most attractive thing for me, is like setting up the agents that they actually resolve some problems, and they're completely set up in a loop that it works. So that's why we're doing this for the financial institutions as well, because it's all secure. We put the protection, and we know how to set it up. So I think the most fun will be still to be doing the AI family resilience programs, because those are kind of entry points, and really talking about operations, sales, marketing, and then finance. And I mentioned about health and wellness, and we got just 4 minutes to wrap it up. So I'm just not gonna talk about health and wellness anymore today. I will do more sessions. I'm actually gonna have one more session today, so I'll record a little bit more about that health and wellness opportunities. And I think we covered the whole ecosystem within the 3 days. There is a value, and there's an opportunity for anyone that wants to talk or reach out to other individuals. If you are an investor, if you're looking for the properties and you're looking for something in a self-storage asset class, I can recommend probably several other investors, but Fernando is the one that will actually give you this the right way. It's gonna provide the value, provide the education, and it will not be a bait and switch type of conversation. You're gonna have the concrete information with that firm. And I still want to talk about, Fernando, the biggest benefit of this for the families. Can you talk about and I don't want to ask you about your investors, but if you can maybe talk in some numbers, what do you think is the biggest advantage for them? And I'm leaning and obviously thinking about the tax advantages of this asset class.
Yeah, I think even before the tax advantages, it's one of passive income, truly passive income. So, if you want to become my competitor, I'm more than happy to help you do that. But a lot of people find that, running a new business that you're unfamiliar with, there's a lot of headwinds, and you need to invest a lot of time and training to get to the point where you can operate and compete with those that have been doing it for 10, 20 years. So the mailbox money is great, because now you're making money while you're asleep through the efforts of somebody else that, let's say, is more adept at that industry than you are. The tax advantages are absolutely phenomenal. So most of our investors invest with us because of the tax advantages that we're able to push through. Primarily three different types of tax advantages. The first is going to be accelerated depreciation that comes via cost segregation studies. Typically, just with those alone, for every dollar invested, you can get anywhere between 60 cents all the way up to $2 back in bonus depreciation to offset any tax liabilities that you may have. In addition to that, we also do partial asset disposition. So this is when there is some type of construction program. If there is, let's say, a warehouse that we need to tear down, we can actually assign value to that warehouse and take that loss of that value when we're demolishing it, and we could pass those through to the investors. And then, the other main one that we use is Section 179 depreciation for equipment. Most people are familiar with Section 179 because of, let's say, work trucks or work vans, but portable self-storage units that can be lifted with a 5,000-pound forklift, we're also able to depreciate that entire asset in year one. So let's say I have a project right now in West Virginia where we'll be adding about $600,000 in portable storage containers, and those containers can be all depreciated in the very first year. So, let's say you're in the 37% bracket, that is a substantial savings just in the very first year of the investment, without even taking into consideration all of the profit that comes from the actual sale of that asset down the road.
That's cool. So you're basically doing a better modeling with this because you can compound that knowledge and add those systems in place. So thank you, Fernando, for sharing this. And I'm just gonna say something. I would like to invite you to a repeat, maybe within a month. We're gonna have probably more people coming in, and because that's what the ecosystem I'm building. I don't want to charge too much for this. This is gonna be based on a value that they're receiving, right? We got a trusted service provider network at the very kind of base price, but they're still getting a lot of great information. So that's great for the contractors that are in a market and really want to do their business. So slightly different, right? Slightly much more automated. And that's what we can teach them to do so, because that's basically a great time for the operators that got it and they're running with it and then enhancing their operations. So that's part of the consultancy that I do specifically. So it's kind of a natural way of pulling out together and talking about your time. And for me, we didn't have a chance to talk about life really today, Fernando, but busy life, busy professionals, you always doing something fun, and planning and strategizing is a big part of the masterminding process as well. So I met Fernando through other mastermind program, and that is a way that some people can move forward very quickly because they're getting that knowledge in a very, very short period of time. And that's what Jesse was talking about on the day one. We really have the solutions for the workplace violence that are done by the Center for Aggression Management. They are done completely different, but believe me, we're gonna be leveraging a lot of AI to make sure that this training will be repeated. And that's why I'm building this as that block by block AI safety and security alliance, so we can find some efficiency within the zip codes and really those trusted service providers that will be communicating on a platform and having access to our applications. So applications I'll be presenting on Monday. This is we got probably about 8 apps that are just for the business owners that save you time and make your life much easier on whatever you need to accomplish on that day. Real estate professionals, I think that's the most important group of those professionals, but we are specializing in that full brain cloning, making sure that for the real estate professionals doing the video avatars, just to extend your time on the media and for the media creation. I think that focus is also still gonna be with the studios, building, acquiring, and expanding the studios, so the production of the good materials can continue. because I don't want to see too many AI avatars. I would rather see people on a camera. But now with the deep fakes and you will see the avatar that we are coming with as well for the co-living guy. So yes, the co-living guy will be my avatar fully, because I am just trying to extend myself a little bit from that educational perspective and knowledge sharing. And thank you, Fernando, for joining and showing up today and really talking about the great asset class that is still very, very in prime area. And thank you for specifying about those mom and pop situations, because that's where the opportunity is. But obviously, it's off market, right? It's something that you can mine yourself or find yourself. You still need to have a good group of people that can guide you. So go ahead and check SSSE. And for Thomas, I'm gonna be sharing more information with his network because of what we'll be building for Thomas. It's a different group. With Fernando, I wish you a great time. Good luck with everything, and hopefully I'll see you maybe within a month or two for some structured program that I would like to propose to you. Have a great day.
All right. Thanks. Talk to you soon, Andy.
Thanks. So Sal, I think I'm just gonna close this off fully for today. Thanks to everyone that was watching and paying attention, because I know what's gonna happen right now. We're gonna chunk it out. We're gonna have the videos. All those videos will be processed. We're gonna put it in that community portal. So the community portal is really where everything is gonna go now as a reference with the contact information and everything else that we are doing. Just wanted to see if I had anything for Thomas over here. Yeah, I'll just leave you with this. This can still get you free access to the Q&As, to the open office hours during the week. But if you are a business owner or looking for the solutions, we are expanding also our Go High Level University. So the Go High Level is one of the tools that is used for the automations. I just know that this is an easy enough tool that we are basing some of the curriculums or syllabuses on that. So that education will go hand in hand with the portal access as well as access to those applications that we have. And I think the most fun and the most important aspect of this is that those applications are now performing and they can be built for any new trusted service provider that would like to participate, leverage that network. And anything else? I know that I covered quite a lot over the last 3 days. What we can do to help you from that total TV perspective, from the marketing perspective, to grow your business. We're still gonna be pushing a lot of messages, a lot of promotions, but Sal has been doing something fantastic over the last 6 months as well. He started creating those avatar videos for the business owners and really started creating also that ecosystem that provides value to others. So thank you, Sal, for doing this. And those that are available, I will still turn on the 6:30 p.m. for those that would like to ask questions. And if you're gonna get access to the portal, that's gonna be available next week, starting with Tuesday, Wednesday, and Thursday. Because Monday I'm gonna actually do different meetings, but they are still gonna be quite purposeful. On Monday between 2 and 4, we're gonna be doing follow-ups, and if anyone has questions right now, we've been displaying this on a TV. We're gonna have even more promotions, because now you can actually come and join us and ask the questions, and I will still give you all the information through promotional materials that we have as a downloadable materials on our websites. Call us, check the QR code, and the programming starts really every month. We also start those cohorts. So I think that that's the most important to understand, that the cohorts is a concentration of few business owners that want to work on the solutions for their businesses, but also at the same time upskill the employees, or upskill and provide the training or AI campus or AI academy under your organization. So it's not only the principal and the big boss is taking the training. We need to make sure that those trainings are disseminated throughout the organizations, and we do that with the simple solutions, simple programs like workplace violence training, safety training for the employees, and then we can really move in other strategies, because that would make sense for that organization. So thank you, Sal. Thank you, everybody that been watching. Looking forward to actual conversations. We are planning to do, I think, on Friday, Sal, if you're gonna be okay with that. On Fridays, I will start inviting security professionals, because I need to create that podcast for the elderly, basically from the security, safety, and just being careful. And we'll be doing like a explainer videos, making sure that they're nobody is taking advantage of the individuals that basically are by themselves. And that's why I also talked about that caregiving. So if you are taking care of your parents, or really are caregiver, looking for caregivers to train to become virtual caregivers, to enhance your opportunities in a marketplace, as well as opportunities for your family. Because again, training can be done now within just a few hours. We can do it fully virtually, and you don't have to go to the 4-year program or university. I strongly encourage higher education. Is, that's where all the ideas are coming from, right? You need, in order to build the vision, you need to understand something. And then when you have a vision, then you're going after that vision. AI can help you, because believe me, it helped me a lot to compartmentalize the information, and then being able to build segments by segments, and then deploying them as needed. So thank you, Sal, and I'm looking forward to our next conversation. Please think about this ecosystem environment as always on. We are always on right now, and we are always connected. If you want to have a conversational access, everything will stay on that AI 2026 platform until the end of this year. We got domains for the 2027, so we're gonna switch it to the 2027 next year. But this is gonna be that cohesive platform, and I just gonna close it off with showing the dashboard for this, because I changed a little bit just to make it a little bit easier to organize. And so those are different Zoom rooms. So the main one is here. But if somebody is going to call me, hey, Andy, I need the tech check, we'll be in the tech check. And then Tuesday, Wednesday, and Thursday open office hours are happening here as well. So if you come back to this portal, you will be able to hit Tuesday. I will add the countdowns and the timers, so everything is clear of when each meeting is here as well. Plus, we can always go back and do something similar on a Zoom. And on LinkedIn, I think if you are a business owner, the easiest way to get more information from me, I think it is on LinkedIn, because everything there is really professionally developed, and we write a lot of articles and posts there as well. So if you're looking for the solutions, believe me, we got solutions, we got answers, and you can really learn how to apply it in your ecosystem, in your life, so you can get to the work-life integration sometimes, so you can enjoy your life the way that you want to, and it's possible right now in 2026 for most of the families. And looking forward to the connections with you. Thank you.